In Asia, stocks closed higher today with shares in Greater China leading gains after the positive momentum seen on Wall Street overnight. Greater China markets initially opened mixed but staged a comeback to lead the rest of Asia. The Shanghai Composite ended the trading session at 1.23%, while the Shenzhen Composite closed 1.106%. Hong Kong's Hang Seng Index gained 1.18%. In Japan, the Nikkei 225 rose 0.99%. The Topix Index ended 0.62% higher. In South Korea, the Kospi edged up 0.62%. Australia stocks, meanwhile, saw relatively modest gains as the ASX 200 Index ended the session at 5,661 points. And U.S. stock index futures were slightly higher amid signs of thawing trade tensions between the world's two largest economies. At around 3:40 a.m. Eastern Time, Dow futures rose 70 points, indicating a positive open of more than 94 points. Futures on the S&P 500 and Nasdaq were also seen relatively upbeat. Market participants are gradually becoming more optimistic about the prospect of the U.S. and China reaching a comprehensive trade agreement. It follows a flurry of news this week pointing to cooling tensions between the two global powers. On the data front, investors are likely to closely monitor the latest jobless claims figures at around 8:30 a.m. Eastern Time, with import prices for November scheduled to be released at the same time. In corporate news, Adobe and Costco are both expected to publish their latest quarterly earnings after Thursday's closing bell. All right, let's look at what's happening on the domestic commodities market here. One major commodity very crucial in the building and construction sector is cement. Cement price has increased by 1.96%, putting a drag on Nigeria's construction industry. What is driving these prices? Let's talk to one of the research analysts at financial derivatives company, Mukhtar Jimo. Good afternoon, Mukhtar. Thank you for joining us.
Good afternoon, Chimeze. Thank you for having me. So
cement being a major input in the construction sector, the price of that commodity has increased by 1.96% to 2,600 naira per bag. That's in the last month. What is responsible for this price increase?
Yes, Chimeze, the cement market in Nigeria is an unregulated market. And one of the main features of an unregulated market is that forces of demand and supply dictate prices. So price can only increase when you have a distortion in supply or a distortion in demand. So in other words, an increase in demand or reduction in supply. So what we've seen, as in the case of cement, is that the aggregate demand for cement has increased as a result of the end of the rainy season. So households and businesses have begun construction and renovation of their buildings. That is what's driving price. And on the supply side, although supply has improved a little bit, there has not been a commensurate increase in supply to overall the effect of the increase in demand.
All right, what does the outlook look like in terms of prices of this commodity in the next quarter?
Yeah, in the next quarter, we expect the seasonality effect to kick in further because we're going to be moving deeper into the dry season and construction activities is going to intensify. So if that happens, prices are bound to increase in the near term.
The construction sector slowed to 0.54% in the third quarter of 2018 from 7.66% in the second quarter, underperforming GDP growth of 1.8%. What could be the reason for the sector's paltry performance?
I think we need to understand that the GDP is a coincident indicator showing the state of the economy at a particular point in time. So the GDP in Q3 came in at 1.8%, and whereas the construction sector slowed to 0.54%. And that tells us that there's something happening in the sector. In Q3 is usually the peak season of the rainy season. So construction activities were muted. In addition to that, the delayed implementation of the 2018 budget also contributed to the paltry performance of the sector.
All right, thank you very much for your time, Mukhtar. Mukhtar Jimo is one of the research analysts with Financial Derivatives Company. And barring any last-minute change, Nigeria's first gold refinery will be launched today in Ogun State. The launch of the new refinery, which follows its successful completion, comes after the federal government announced the issuance of an operating license to an indigenous mineral and commodities company, Kian Smith Limited, in October. A statement by the company reveals that the refinery will not only increase government's revenue at a time of oil price volatility, but add value to gold miners and traders. The Minister of Mines and Steel Development, Mr. Ba Buhari, who is expected at the launch, will be joined by the Ogun State Governor, Ibikule Amosu, and other officials from the public and private sector. And investors in Uganda's planned crude oil pipeline are asking for a higher tariff than originally agreed, which has raised doubts over its targeted date for production to start. In 2016, landlocked Uganda picked a route through Tanzania to the country's Indian Ocean port of Tanga for the pipeline to transport crude reserves from fields in its west near the border with Democratic Republic of Congo. Uganda had aimed to commence commercial crude production in 2020, but delays caused by slow implementation of infrastructure and disagreements with oil firms over taxes and field development strategy has made that target hard to achieve. The government had expected a final investment decision for both the fields and the pipeline to be taken by the end of this year, but this target was now unachievable after demands for renegotiation of the pipeline tariff. And when we come back after the break, we take a peep into the Inter-Africa Trade Fair taking place in Cairo, Egypt. Do stay with us.